Welcome back to our series on trading strategies. Last time we talked about the importance of having a strategy. Today we're diving into our first two strategies, trend trading and scalping. Hey there, I'm Eva and let's start with trend trading. The essence of trend trading is to follow the direction of market movement. The main idea is to buy an asset when the price is going up and sell when the trend turns downward. Pros of trend trading. Simplicity. It's one of the easiest strategies to understand and use. Lower risks. By following the trend, you avoid trying to guess when the market will turn. Psychological comfort. When the whole market is moving in one direction, it's easier to follow the majority. Cons. Delayed signals. Trends can reverse, and if you don't sell in time, you risk losing profit. Market unpredictability. Trends can change sharply due to external factors. Now let's talk about scalping. Scalping is a strategy where traders make many small trades, trying to profit from small price changes. The goal of scalping is to extract profit from the slightest fluctuations, holding positions for just a few minutes or even seconds. Pros of scalping. Quick profit. Scalpers can make money even in short periods of market movements. Independence from long-term trends. Scalping doesn't require predicting where the market will move in the long term. Flexibility. You can make many trades per day, earning on market volatility. Cons. High stress level. Constant price monitoring and quick decisions can cause strong tension and fatigue. Commissions. Since many trades are made, you have to pay commission to the exchange each time. A small profit on each trade. Scalping is based on small price changes, so each trade can't be called a big luck. Have you tried either of these strategies? Which one appeals to you more? Let us know in the comments. In our next video, we'll explore swing trading and news trading. Stay tuned!